The story behind Micron's massive run. Micron is not a flashy AI company like Nvidia. It doesn't build GPUs or AI models. Instead, it does something equally critical. It builds memory. And in the AI era, memory is no longer just a supporting component. It is becoming the backbone of AI infrastructure. Think about it this way. Every AI model, every data center, every large language model needs massive amounts of memory to function. That means DRAM, NAND, and especially high bandwidth memory. Micron is one of the three global giants in this space, alongside Samsung and SK Hynix. And right now, demand is exploding. That's why the stock has already gone on a historic run, rising more than fivefold in just a year. But here's the surprising part. Even after that rally, analysts still believe the stock is undervalued. Why analysts still see 40% upside? A top Wall Street analyst recently set a $600 price target for Micron. At current levels around the mid-$400s, that's roughly 40% upside. So what's driving this optimism? It comes down to three powerful forces. 1. The AI memory boom. AI is not just about compute anymore. It's about memory bandwidth. Modern AI systems require massive datasets to be processed in real time. That requires extremely fast memory. This is where HBM, or high bandwidth memory, comes in. Micron is heavily investing in this segment and is expected to supply next-generation AI systems, including future chips powering advanced AI models. And here's the key insight. HBM capacity is already sold out. Demand is so strong that companies are locking in long-term supply agreements. This is a fundamental shift. Memory is no longer a commodity business. It's becoming a strategic asset in AI infrastructure. 2. Supply constraints create pricing power. In the past, memory companies suffered from oversupply. Too many chips, not enough demand. Prices would crash. Margins would collapse. But this cycle is different. This time, companies are being disciplined. They are not rushing to build excess capacity. As a result, supply is expected to remain tight until at least 2027. That creates a powerful dynamic. When demand rises faster than supply, prices go up. Analysts expect memory prices to increase 30% to 50% quarter over quarter in some segments. That translates directly into higher revenue and profits. 3. Strong earnings as the near-term catalyst. The biggest catalyst right now is earnings. Analysts expect Micron to beat expectations again. Projected numbers are staggering. Revenue could hit over $35 billion, with earnings per share above $20. If those numbers come through, it reinforces the entire AI memory thesis. And markets love confirmation. That's why earnings season is being watched so closely. It could be the trigger for the next leg up. The valuation puzzle. Here's where things get really interesting. Despite all this growth, Micron is still considered cheap. In fact, it's one of the lowest valued stocks in the S&P 500 based on forward earnings. That creates a rare situation. You have high growth, strong demand, limited supply, and low valuation. That combination is extremely rare in the market. It's what analysts call a mispriced opportunity. The risks you can't ignore. But let's stay grounded. This is not a risk-free story. The memory industry is historically cyclical. What goes up fast can also come down fast. Here are the key risks. First, demand could slow. If AI spending cools or hyperscalers reduce budgets, memory demand could weaken. Second, supply could catch up. If companies suddenly ramp production, prices could fall. Third, broader macro risks. Geopolitical tensions, interest rates, or economic slowdown can impact semiconductor demand. And finally, insider selling and valuation concerns are already being flagged by some analysts. So while the upside is strong, volatility is part of the story. The bigger picture, why this matters globally. Micron is not just a stock story, it's a signal. A signal that the AI boom is expanding beyond just GPUs. We are entering the next phase of AI infrastructure. Phase 1 was compute. Phase 2 is memory. And Phase 3 could be networking, storage, and energy. This is how technological revolutions evolve. They spread across the entire ecosystem. That's why investors are now looking beyond Nvidia and into companies like Micron. Investment takeaways. So what should you take away from this? First, the AI boom is still in its early stages. Second, memory is becoming a critical bottleneck and opportunity. Third, Micron sits right at the center of this transformation. If the supply-demand imbalance continues, the upside could be real. But timing matters. This is a high-beta cyclical stock. It can move fast in both directions. Final thoughts. Micron's story is a perfect example of how markets evolve. Yesterday's commodity business becomes today's strategic asset. Memory chips, once overlooked, are now powering the AI revolution. And that shift is creating one of the most compelling investment narratives in the market today. The big question is no longer whether AI will grow. It's who will capture the most value from it. And right now, Micron is making a strong case that it deserves a bigger share.